Hello and welcome to Virtual Investor Conferences. My name is Phil Carlson, and on behalf of KCSA Strategic Communications, as well as our co-host OTC Markets Group, we're very pleased you have joined us for a fireside chat with Glass Brands, a vertically integrated cannabis company with a focus on the California market. Their session will be moderated by Scott Fortune, Managing Director and Sell-Side Analyst at Roth MKM. Please note you can view the company's availability for one-on-one meetings through the Scheduled Meetings tab found on the conference platform. At this point, I am very pleased to welcome Kyle Kazan, co-founder, chairman, and CEO, Graham Farrar, co-founder and president, and Mark Vendetti, chief financial officer of Glass Brands, which trades on the OTCQX under the symbol GLASF and on the CBOE under the symbol GLAS. Welcome back, Kyle, Graham, Mark, and Scott.
Welcome, everyone. I'm the Managing Director, Senior Research Analyst at Roth Capital Partners, covering the cannabis and agriculture business industries. I will be moderating today's discussion with the management team of Glass Brands here. It's the largest publicly traded, listed cultivator of cannabis in California, selling to the world's largest cannabis market. And so without further ado, for those who don't know the company already, it's a great time ahead of likely rescheduling coming forward here to get an update on the leading cultivator and cannabis brand building company in California with a unique and what they call a unicorn 5.5 million square foot of cultivation in a state-of-the-art greenhouse located in prime agriculture growing environment in Ventura County. The Appalachia there is ideal and a reason most vegetables are grown in California for the most of the U.S. in this area of the country. The company recently completed the expansion of the Greenhouse 5 to add another 700,000 square feet of capacity or 200,000 pounds of cannabis, and now they can produce annually up to 600,000 pounds of flower on an annual basis. It has 10 stores in California, but focused on building out its own brands of Glass House, Allswell, and Plus, as the company continues to execute on its long-term strategy. So without further ado, let's get started. For those who are not familiar with the story, let's detail the greenhouse asset you guys have and the long-term positioning of Glass Brands here, the scale, the expertise, and the focus on the supply chain as you go forward. Just a quick introduction of the company and the ideal greenhouse asset that you have. That'd be great.
Yeah. So I know we're in one screen. I'm Kyle. This is Graham. There's Mark. Scott, always good to connect with you. We enjoy our time with you and your very good questions. So I'm going to ask Graham. I'm going to go 30,000 feet. I'm going to ask Graham to dive into Greenhouse 5, which is super exciting. The way we looked at this was when we got Greenhouse 6, which was our first very large flower greenhouse, which the flower greenhouse is what we monetize. That's what got us to profitability. That to us was like the big engine on the airplane to get us over to Asia. Having one engine worries us a lot because things can go on in ag. So adding a second engine in a separate greenhouse feels like it gives us that much more safety, also that much more thrust behind it. And so that's one aspect, and that is our main aspect. Again, I'll ask Graham to dive in. Quite exciting, and what he and his team have done is remarkable. Number two, we're vertically integrated, and we have 10 stores, and we're looking to pick up management of a number of other stores. And one of the things that we see as sort of the white whale that we want to attack is the illicit market, which many people feel is 2/3 of the California market. And to be clear, we would like the illicit market and the government to make it easier for the illicit market players to come to the legal market. But until that time comes, we think we provide the tested product, the better product, the safer product. And so one of the things that we found was my son, who's an avid cannabis user, he's over 21, he was buying from the illicit market. And I was asking him, this is a few years ago, like, why are you choosing that? One, I don't just give him cannabis. He's a young man, he has to do it himself. And he said the pricing, just quite frankly. And he acknowledged at equal price, he'd always go to the legal market. And so I challenged Graham and the farm team and the operations team say, how do we get to a $9.99? So for $10 out the door, including our high California tax and everything, that they could get the legally tested product. And so that's something that we also recently introduced in all of our stores, which is you can go in and you can get fresh, not aged and, trying to blow it out, but fresh, an eighth of Allswell for $9.99. So, with the inflation we've had since the pandemic, that $10 feels like, at least in cannabis, has never gone further. So the Greenhouse 5 and the $9.99 out the door. And if Graham wants to also talk about the vape pen that we're also launching, that'd be fine too. If he wants to hold it back for a future Scott Fortune discussion, we can do that. But with that said, Graham, why don't you get into the weeds of that question?
Awesome. Yeah. Thanks, Kyle. So we originally started Glass House about 8 years ago. Our goal was to create products that consumers, brands and products that consumers loved, with the ultimate goal of being the most consumed cannabis brands on the planet. We've always felt that everything in cannabis starts with the plant. So we started as cultivators first. We had a greenhouse that we opened up about 8 years ago. It's 150,000 square feet, felt very big at the time. Then a second greenhouse that was 355,000 square feet, also felt very big. And then about 3 years ago, we combined the assets on a retail at our two existing greenhouses, and we went public. And the reason we did that was to raise the capital to buy the unicorn greenhouse that Scott alluded to, which is our SoCal farm down in Camarillo. It's the second largest greenhouse in the United States. More importantly, even than the size, though, is where it's located, which is in the ideal growing climate. Everywhere we look, 5 miles in all directions, you see people growing crops outdoors and crops that sell for 5 to 10% margins. So the greenhouse was actually originally constructed for tomatoes. Tomatoes, again, that 5%, 10% margin business. So it's built for efficiency. It has 6 greenhouses on it. Each greenhouse is about 20 acres. So about 120 acres of greenhouse, second largest in the country for any crop, 5.5 million square feet. As we sit here today, we're now occupying half of it, 3 of the 6 greenhouses for cannabis, but 2 of the 5 greenhouses that are actually productive. So even today, we're only 40% occupied with another 60% to go. We started with greenhouse 6, which was our first flower greenhouse. That's what we saw up through the end of Q1 of this year. So Q1 of this year, we were able to raise production by about 26% and decrease costs by about 8% to market leading numbers. Second half of last year, we grew for $120 a pound. Our long-term target is to bring that under $100 a pound. Q1 saw great improvement, on a year-over-year, same 4 walls basis. As we mentioned, we just brought on the next greenhouse. We call that Greenhouse 5. Amazing use of capital and leverage there. We spent about $15 million on that retrofit. It's forecasted to bring in 250,000 pounds a year, which is good for about $80 million in revenue and $40 million in gross profit. So $15 million invested is going to return $40 million a year in gross profit. That's now fully up and running. We'll see the impact of that in all of Q2, Q3, and Q4 of this year. Run rate, that brings us to about 600,000 pounds of biomass. So that's flower, smalls, and trim, where we can grow at currently, $120 a pound was second half of last year. Long-term target is $100 a pound. Our goal has always been quality, consistency, and cost. So to grow the best cannabis every time for the lowest possible cost, and then be able to do that at scale. And that leverages into the Allswell 8th that Kyle's been talking about. Our Allswell brand and Glass House combined are now the most consumed cannabis in California, the world's largest cannabis market, also the most competitive cannabis market, and where the most discerning consumer is. So what we're doing now is hitting price parity with the illicit market. We do that today with Allswell and flower, and we're now probably under the illicit market for gummies. 10 milligram Allswell gummies on the shelf for $6, out the door for less than $10. You won't find that any cheaper. This is a tested product. This is a consistent product. You know what you're putting in your body. So it's kind of, people pick bathtub gin if that's the only option, or if that's the only option they can afford. But given the choice at the same price, most people pick Sapphire over the bathtub gin. And that's what we're seeing. Since we've brought this price into the market, we're seeing Allswell rocket up the charts. And it really shows the more people that find out about it, the more people that love it. So, that's where we're at today. It's really exciting. We're cash flow positive for 2023, and the cash flow and business revenue we're currently forecasted for 24 at $200 to $220 million. So a significant jump from the 163 we did last year. It's a really exciting place to be. And as far as I know, the only cash flow positive California cannabis company in existence.
That's great introduction. Let's dig in a little bit more. We'll get into the Oswell and your dispensary strategic pricing there, but let's dig a little bit more, kind of looking beyond Greenhouse 5, what you learned. You quickly, I've seen the greenhouse, very impressive, large. I've seen a lot of different greenhouses, but you quickly added that production, just kind of what you've learned, the ease of it to bring up Greenhouse 5, and once it gets fully optimized, where you think kind of you're driving the cost going from there, and then beyond Greenhouse 5, the opportunities. Obviously you have the demand that's the meeting what you're able to produce out of that greenhouse. That'd be great.
Yeah, so I'm starting backwards from that. One of the great points or important points to talk about is even with the expansion that we've done, there is far less cultivation in California than there was 2 years ago when we started this. So one of the things we've seen, and this is one of the places where you can get an objective, tangible number, it's reported by the state, is the number of the cultivation licenses in the state. When we started the SoCal farm, there's over 8,000 cultivation licenses. As we sit here today, including the expansion and the growth that we've had, there's less than 4,000 cultivation licenses. So about a 40% reduction and the licenses, even again with our expansion, those licenses continue to leave the market, which is why we remain confident that there's demand for the product that we're growing and as we grow. Greenhouse 5, obviously very excited. Nothing easy about it, but we've got an amazing team of people who've gotten a really good track record and a lot of experience in delivering, not only operating one of the largest cannabis greenhouses, but at the same time expanding it. So a tremendous accomplishment, and kudos to them for the way that they did that. We now have 3 more greenhouses left, so another 3 million square feet of footprint of actual structure, currently leased out to a tomato and cucumber grower, which helps, carrying costs, triple nets, they pay rent, it reduces our costs, but we have great terms so that we can ask them to vacate and expand into cannabis when the time is right. Currently, everything we're doing obviously is California only. We do see, tremendous upside, both in terms of volume as well as pricing across the rest of the country. California is the lowest cost market in the entire state. If you look at a category like trim, we sell trim in California for $30 a pound. The next lowest cost is Oregon, which is a mature producer state. It's $100 a pound. Colorado's $130 a pound. You get to Alaska and it's $700 a pound. We make money selling it at $30. So when we eventually can sell into these additional markets, not only will we have demand for everything we can grow, but the price points are likely to be far higher and at the same time far lower for the consumer, which we think is important. This is medicine for a lot of people. So there's no reason in New Jersey, the same Oswell 8 that we sell here for $7.50 is being sold for 10 times the cost. It's $75 an 8. There is no reason people in New Jersey should be paying 10 times the cost for the medicine that people in California can get for $7.50. So lots of upside, currently exploring the next level of expansion that could be all the way from upgrading the existing greenhouses to tearing down and purpose building a greenhouse to retrofitting another one of the veggie houses for cannabis. So we've got a lot of options on the table right now. Really excited about the position we're in, really excited about the cash flow and revenue generation that we've got on tap, profit margins, EBITDA across the board. Metrics for 2024 should be absolutely fantastic.
And Scott, if I could just add, everything Graham said has been intentional from day one. We have said, we have consciously made the decision not to be a multi-state operator. We've had lots and lots of opportunities, including cultivating in New York and Greece and Florida. And we have consistently looked at it, thoughtfully said no. And our whole goal was to build something for the national and international market in the future when the walls come down. And so what I would say is, if someone is considering investing, why Glass House makes sense is that we're built for the legalized model, the descheduled model, when all of a sudden, the fact that we're growing and our goal, our North Star is to get to under $100 a pound in COGS. And most around the country during this prohibitionary market are growing at much closer to $800 a pound. And so that's really our feeling is, we think we're a solid investment now, because if it took 10 years to get to that descheduled place, that's fine. We'll just be that much stronger. Our knives will be that much sharper, and we'll be that much better, so that we can compete and really enjoy a margin lift and a price lift in a nationalized market.
Yeah, worth noting that while we're built for that national market, absolutely nothing in our forecast or estimates or any of the results that we have now are counting on it. So think of us as kind of like a free call option on that happening. The other thing I think it's good to think about is if you're invested in the space, we are one of the few that is a different formula altogether. The MSOs have some awesome businesses, but many of them are variations on a very similar formula. Limited license, regulatory capture, heavily indexed in retail. We are kind of on the opposite end of the spectrum, right? Where we are cultivation, supply chain, brands, honing our chops in the toughest market in the country. We believe that over time, cannabis is going to become normal, as it should. And that means that it's going to be grown in the states where the plant likes to grow. It's going to be sold in the retailers that have the best real estate. It's going to be sold by the same folks that know how to deal with regulated products like tobacco and alcohol and pay their taxes. This is the odds that cannabis is not going to be right alongside those products are very low in our opinion. And when that day comes, we are the perfect fit for that because we have the best supply chain, the best products, the demand from the appellation that consumers across the country show a preference for. When it comes to cannabis, it comes from California.
No, it's great. That's a great update. Well positioned, obviously, long term as interstate commerce comes on board from that standpoint. But let's focus a little bit, kind of shorter term, on California. Kind of consolidations going there. Obviously, a challenging market. You've seen a lot of the bigger cannabis operators leave the market, but if you can do well in California now, obviously that bodes well for the longer end. But just talk about the retail kind of brand within California, and then you can get in kind of your dispensary strategic pricing plan that you've instigated and kind of the consumer pull through on that from that standpoint. But more short-term focus on California, where you're continuing to take market share there. That'd be great.
Yeah, so what's interesting in California that a lot of states don't face is we've got, I would say, the most sophisticated consumer of cannabis in the world. And so if you have a retail store or retail stores, you can't just carry your own products. That's not going to fly. The consumer out here wants selection. They know a number of the other brands. And so from day one, we just tried to carry the best possible brands on our shelves. And that includes ours, of course, because we really love our brands, but we know there's a lot of other external brands that we work closely with. And so knowing that, then you get into where we are today. What the government has done is they've said, hey, we want to collect taxes from the retailer. And so they shifted a lot from the cultivator and put it on the retailer. And what that has done is in the 40% of the state that has legal retail, 60% does not, or
Doesn't yet.
55 to 45, somewhere in that range. There's an overabundance in that 45. So you have too many stores and it's made it a very difficult market for retailers. And that's what exposes, are you paying too much rent? Do you have not a great location? Are you not able to get the best brands on your shelves because you're not paying them? And so we're starting to see we shouldn't say starting. We're in the middle of a washout, unfortunately. And we've seen, MedMen and High Times and Grassdoor and a number of others that are pretty high profile run into some problems. And we're expecting to see a lot more of that before it goes away, much like happened in cultivation when we went through that very difficult time. And so when we looked around and we saw there are several low price leading kind of stores, and we all sell sort of the same kind of brands, and there's not a huge differentiating factor except price, we just realized that's something we're going to have to do. We might as well just go there. There are a number of stores out there that are vocally against this, and I don't blame them. I wish you could hold your prices during a washout. It's just not the way economics work, unfortunately. So it's a boon for the consumer. And if you take care of the consumer and you are able to do it, you can win. And so we've done that across our 10 stores. You get some of the best values in the state, if not the best value. And then we've used our vertical because we're the only real vertically integrated company in the multi-store retailer. And so I shouldn't say it. Stizzy also is vertically integrated, but we have our own farms that we really lean into. So at the end of the day, we think that's a winning formula. We think that while painful, it's going to very much take care of the consumer. And it's almost like a forest fire, and the forest will be better for it once it's done. But it's not going to be easy as we get along, and, you look around and you get frustrated. There's one large retailer that doesn't. They have a different scheme on their taxes. That's painful for all the other retailers in the state that pays it the way we've been instructed to do so. That said, it is what it is, and we just, come to the market with the best that we can for the consumer. We think we'll win with that.
Yeah. So
Maybe Graham, can you give us an update on the consumer after you've done the sub $10 alls well? I mean, the biggest gold mine here is converting that illicit user to the legal side of things, and that's what you guys are going after in a sense.
Yeah, so putting everything aside outside of California, obviously California is the single largest cannabis market on the planet. There's no market that we love better. We've been focused in California 100% from day one. It's the fourth largest economy. It's a $5 billion legal market. There's probably another $10 billion in market in the illicit side, and that is the big opportunity here, right? Is to go after that consumer, to convert them from being an illicit consumer to a legal one. The Allswell Eighth is the tip of the spear on that, and it's important to note that Allswell is not a loss leader, right? At $7.50 on the shelf, $10 out the door with all the onerous California taxes paid, because of our strength in cultivation, that is still a 60% plus margin product for us. So we are making money while selling eights that are half the price that other stores brag about, right? So I don't think it'd be overstated just how transformative that product is. Also, we're not seeing it cannibalize our Glass House consumer to any significant degree. We're seeing it bring new people into our stores, which helps the store sales as well in general. So it is a very strategic product. Within California, there is nothing that touches it. And you can see that in the progress that we've made. Despite the challenges in California, we grew from 163 million in revenue last year, forecasted over 200 million in revenue this year, margins north of 50%. Guidance for Q2 was $52 million. Mark, correct me if I'm wrong. So you're seeing tremendous growth within this challenged market. There's cases, it's hard to find data sometimes, but we have other public company peers here that in the same quarter we produced 62% margins, they reported negative 1% margins, right? That's the same pricing environment between the two. So it really shows just how strong our advantage is. Very much in the standard Oriole or the Carnegie model, our goal is to disconnect ourselves from the price cycles. We don't control those, but we do control our cost, and cost savings are forever. So our target is to grow. Cannabis is so high on the qualities curve and so far to the left on the cost curve that no matter what happens out there, we survive, thrive, and make money. In an up cycle, it's more. In a down cycle, it's less, but other players leave the market and give room for further expansion. So we feel really good about where we're positioned today. Everything else is gravy on top of that.
Yeah, let's get into, obviously the biggest news out there is potential rescheduling, the positive impacts for the industry, maybe Mark but investors are, until we get capital markets opened up and institutional capital get in here, investors are looking for companies that are generating cash flow and are going to benefit from this rescheduling. Maybe a quick update on the rescheduling to Schedule 3 here, and then what that can do for your financial model and potential financings or whatever you need from your balance sheet side of things would be great.
So before I turn that over to Mark, as far as what it does to our numbers, what I would say is I think a good, nice, close presidential race puts heat on both candidates. And so we want heat on President Biden because so far, literally other than saying that we're going through the process of Schedule 3, during his administration, we've absolutely gotten zero movement. So this is quite impressive. We don't want anything to slide, and we think that President Biden, for any kind of a chance to win, is going to need this Schedule 3. And we think everything we're reading and everything we're seeing and everything we're hearing, that a decision formally will be made before November 5th. So that's exciting to us, and we think it's going to happen. And Mark, when it happens, what does that do to us?
So the most important thing, at least out of the gate, is it gets rid of the 280E tax burden associated with being a Schedule 1 drug. Moving to Schedule 3 eliminates that. Just looking back at our 2023 taxes, that would reduce our tax burden by about $10 million. So instead of paying about $10 million in taxes, we would end up paying basically zero for 2023. And as we get bigger, that number is going to grow. So the number for 2024 is going to probably be proportionally increased by the size of our revenue increase on a year-over-year basis. So it's not an insignificant amount to us. Separately, we think there are some other additional benefits that will materialize from this. One, and probably next in line, is the ability for us to uplist to one of the major exchanges, New York Stock Exchange or NASDAQ, which would enhance our ability to get more capital and hopefully at a lower cost, which is critical, as we won't look for ways to efficiently and effectively fund our growth. And another follow-on benefit, quite frankly, would be what we think would be hopefully some pressure to on safer banking regulation, which would just expand normal banking for the industry. And one area in particular, customers would be able to use their regular credit cards. And our experience is that credit cards could increase purchases in our retail dispensaries by up to 30% per purchase. So lots of benefits that could accrue from this when it happens.
And
So
Scott,
I appreciate that. What a lot of investors don't realize is there are a lot of operators out there that aren't paying their taxes. They still have that tax liability. Yes. So this operating or this cash flow windfall from eliminating 280E will have to be going to pay that liability. And you're one of those companies that's generating cash flow and have paid their taxes on a timely basis, which is great. So
yeah. And Scott, I know we're short on time, but I want to mention, because we're talking about all the good financials, and Graham brought up over $200 million in revenue and the engines and all the cannabis we're selling. And the one thing that on the political side is there's a lot of noise out there about court cases and age and all these kind of things that feel like a big distraction. And there are big issues in the world, but to the extent that the people that are watching this are considering investing in this space, take the time to reach out to their congresspeople, and more importantly, to reach out to the president to use his pardon pen. There's almost 3,000 cannabis prisoners sitting in prison, and not one of them did anything at the scale of what the three of us and our fine team members do every single day. The amount of cannabis that we actually move, or marijuana, and it's still Schedule 1, that's happening in basically a legalized space. While these people sit in prison, it's almost like the war is over, yet we just left the country and we left a bunch of POWs. And Mr. Biden helped Brittany Griner, which we agree with 100%, to get out of Putin's jail and traded away some pretty serious folks to do it. He doesn't have to do that here. All he has to do is just commute, better pardon, but just commute. And Schedule 3 doesn't do anything there. So our ask is, please take a minute, call the White House, ask President Biden to fulfill his campaign promise. So Scott, thank you for letting me use our platform here just to mention that.
Yeah, no, we'll wrap it up. We got a quick minute if you guys want to summarize it up. But Glass House has been very well in executing. You've executed over the last 2-3 years and said what you've done, and that has de-risked the story here from an investment standpoint, and that reflects in your stock and your share price. But any final quick thoughts here for investors on the Glass House brand story here?
People call him the Michael Jordan of cannabis. That was on our last podcast. And even though I'm a Laker guy, to sit next to Michael Jordan like this on a continual basis is phenomenal. And Graham's going to make an invitation to everybody real quick. Go for it.
Yeah. So one last thing, we've got an investor day on June 21st, 6/21 at our farm in Camarillo. Everybody who's a shareholder is invited. Mark, Kyle, and I will all be there. We'll also be doing tours of the farm. We can say the amazing things about it, but nothing says it like actually stepping foot in it. So we'd love to see you guys. Go to ir.glasshousegroup.com to sign up for that. And we hope to see you on the 21st.
Will they get to meet Scott Fortune in person?
I hope so. If you see
I
it.
agree. Go visit. It's a great glass house, greenhouse, and everyone should go see it and visit it. With that, thank you everyone for joining in, and thank you to Glass House Brands.
Thanks for having us.
Thanks, Scott.
Thank you.